In this video I want to do a quick update about Gravity. This is a stock that I own. This is a microcap in Korea, and this is maybe the cheapest investment I have in my portfolio. Yeah, this is the cheapest investment I have in my portfolio because the company is trading at cash. And this is a company in Korea, so this is not abnormal, but I still think the company is extremely cheap. So in this video, what can we get? We will talk about Gravity on Grow Focus. We will talk about the recent slides they presented. They just released some update about the end of 2024 that was released at the middle of February, and we will talk about the business model, how I see the situation, because I think the stock is extremely cheap, and maybe if it continues to drop I will buy more. So this is it, guys. This is the plan for this video. In case you don't know Gravity, this is a small company in Korea. They develop online games, mobile games. They have a license called Ragnarok since 2003, if my memory is correct, like 20 years. And this is a license, and people play this license not only in Korea but in Japan, in the Philippines, Thailand, Europe, America, a lot of countries, mostly in Asia. What is Grow Focus telling us? Gravity is an online and mobile game developer and publisher based in Korea. Its principal product, Ragnarok Online, is an online game which is available in more than 91 markets. Its game includes all different games, blah blah blah. Okay. The company generates revenue from online games, mobile games, and other sources, including character-based merchandise and animation. Before, Gravity made a lot of money on console games. Generating a lot of revenue at least. And console, not very profitable business model. And then in 2017, the company went from PC and console to mobile, and it turned out that it's very profitable to have mobile games. If you look at the revenue for this company, very tiny revenue. And then in 2017, they shifted to being a mobile game company. What about the net income? Before 2017, the company was not profitable. After 2017, the company became profitable and came back to growth mode. Before 2017, the company didn't have a lot of cash. I mean, this was a tiny company with a small market cap. After 2017, the company is now enjoying more cash and more cash and more cash without any debt. And now, same thing for the free cash flow, by the way. They don't dilute shareholders, they don't do buybacks, they just accumulate cash in their balance sheet. And now the cash pile is around $390 million, $400 million. The company is trading in New York Stock Exchange, by the way. So you can invest in this one. There is an ADR, and you can buy it from your US broker. And this is the stock price, right? You see a lot of volatility because if they release a huge, successful game, momentum, stock price goes up. If they have some flops and their games don't work much, the momentum is dropping, and then the stock price drops. But if you look at the 10-year performance, you have a plus 28. It's a 30 bagger almost. And what about the performance since 2017, by the way? If you spotted this stock when they became profitable, 2017 was around here, right? Yeah, okay. Let me put it in English so you understand. 17 plus 500%. And it has plenty of potential. And when the company was hype, when the company was cool, and when the stock price went up in let's say 2021, at the middle of this bubble, let's call it this way, it was a 10 bagger multiplied by 10. It can happen again in the future. The business has not changed, and now the business has a lot of cash. If you go through the latest investor presentation, these are unaudited results, so maybe they will be adjusted, but you get the idea of the results. You look at the revenue. Now revenue and profits are decreasing. Okay, maybe that's a bad sign. No, nothing relevant at all. They just increased the marketing cost, the advertising costs. So no major red flag. Okay, Bottom line, absence of new releases of new games and increase of marketing expense. So maybe you have a deceleration in the business, but the company is still making a profit. And let me remind you that all the profits are going into the cash pile. Okay. And here are some charts for you. Okay. The revenue on the quarterly data not growing that much. Operating profits decreased because of higher marketing. So you can play around with your marketing cost. Net profits fairly stable. Liquidity is increasing. Liquidity right now is, maybe I have to zoom in so you can see well. The liquidity is in million of won, the Korean currency. That's 500,000. And I went to Google, 500,053. Well, this number, it's huge. If you convert it to US dollars, it gives you $380 million in cash. And GuruFocus is not updated because these are preliminary results, unaudited results. So maybe it will be available in a couple of days, couple of weeks on GuruFocus. So if you look at the latest data, quarterly, it's a little bit more than this. You have currency rates. The won has lost value, depreciated compared to the US market. So now the latest update for the cash balance should be $380 million. Okay, remember this. What is the market cap of the business right now? $380 million of market cap. So officially, the business is trading at cash. That's why it's the cheapest investment I have in my portfolio. For a company that is still having positive revenue, positive net income, the growth is not that good, but you have kind of a psychological threshold. If you look at, okay, let me show you something now. I want to check charting on FinChat. FinChat is a great tool if you want to have some charts. And you have a discount code in my description in case you want to try it out. Maybe you have 1 month free or something like this. If you check the cash. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. Okay, this was a line total cash and short-term investments. If you go to the latest data, quarterly data, and let me put the date, that's fine, okay. In orange, okay. In orange here, you see the cash balance of Gravity for the past 10 years. In blue, here you see the market cap of Gravity for the past 10 years. You can see that before 2017, before the company turned profitable, sometimes you had more cash than the market cap. But since the company was restructured, since the company became profitable, there was a before and an after 2017. This is what I try to say. After 2017, every time the stock was trading at cash level, it rebounded sharply. Here we go in 2018, in 2019, in 2022. Here we go. 2022, I can even show you even better. Let me zoom in a little bit. Okay, very well. 2022, here we go. And now, here we are. March 2025, the company is trading at cash. I would say it's not 100% certain that the stock will rebound, but it has a very good chance of rebounding at this level because the business model has not changed. And if they deliver new games, new releases over this year, it can rebound sharply. I wouldn't be surprised if that's a double in the coming year because of some catalyst. And later in a few minutes, I will tell you another catalyst that will move the stock price, maybe. Okay, so that was the first thing, why it's very cheap. Yes, it's a company in Korea, and they have no clear incentive to pay dividends or buybacks. This is just not their culture. The cash will just continue to sit here. So as the company generates more profit, everything will go to the cash balance, and the cash balance will increase over time, regardless of the currency, the FX change. And what can I show you here? The company is still generating the majority of their revenue through mobile, 80% of their revenue in mobile. Revenue per region, nothing big at all, and they plan to deliver a lot of new games in the next 12 months. So maybe you will have more revenue, more net income, and more cash that will be added to the balance sheet. And yeah, okay, acceleration, new game. And I know some people have tried to contact management, to force management to pay a dividend or buyback, and they don't want to listen. The investor relations say, no, we want to invest in new games. We are a gaming company, so we use our cash to invest in-house. The truth is they can pay a dividend and buyback. It's just not their culture. It's a company in Korea, and capital allocation decisions in Korea are very different. Now here is another twist, another catalyst. Gravity is a company that is owned by a Japanese conglomerate. 60% of Gravity is owned by Gung Ho Online Entertainment. This is also a company you can find online, by the way. Gung Ho, you can check on Google Focus. Gung Ho Online Entertainment. How can I write Gung Ho? Let me put this. Search bar, Google Focus. It will be faster. This is a company in Japan, and they have been investing in Gravity since the great financial crisis, even before. And you can invest in this stock. This is still a company that generates a lot of cash. It doesn't grow much, but is doing buyback. They are doing a big buyback program. The founder of Gung Ho is the brother of Masayoshi Son, and SoftBank and Masayoshi Son took some ownership of this one in 2015-16, which creates a lot of buyback pressure here. And now Gung Ho Online just had a new activist for a few months. Somebody came to the board. They own a decent pie of this company, and they try to force more dividends, more buybacks. And this is exactly what is happening. Last week or 2 weeks ago, Gung Ho Online Entertainment published something saying we will increase the dividend payment, we will increase the buyback programs. So maybe you will have second order effect. And because Gung Ho owns 60% of Gravity, maybe you will have a second order effect. I wouldn't bet on this one, but in case we have a few percentage of chance happening, this is a potential catalyst to Gravity. So you have a first catalyst for Gravity in case it rebounds, because it has always been below the cash balance since the company was profitable. Okay, that's your first catalyst, a new game or something else. The second catalyst is a typical Asia pickup, in more consumption in China, more demand, Asia booms. That's a normal macro catalyst. The third catalyst is this, from Gung Ho Online Entertainment, more activism pressure on the business. That could be a really great catalyst. We will see. Wait and see. Nobody knows if Gravity will implement a dividend policy, a buyback program, but we can just hope at this moment. And this is exactly the reason I'm investing in Gravity. Now I just wait, hold Gravity at cash level, extremely cheap valuation. I don't think it can go below the cash level by a lot. It happened in the past. If you look at 2014, it has happened, but the company was not profitable at the time. Okay, if I go to 2014, 14, 15, look at this. During 2 years, the company was trading below cash. So in the past, it happened. But at the time, the company was not profitable. So you have the same thing in the US, right? Sometimes you have net value plays, and because these are poor businesses, mediocre, bad businesses. But now this is not the case. Gravity is not a bad business. They generate some money, they are profitable, they grow by a little bit, and they deliver great games that are in the top 3 most downloaded games in the App Store. Great games, great releases, trading at cash, and we have 3 potential catalysts for the stock. Just if the stock price continues to decline, I think I will buy more. This is just too stupid to ignore at this point. The company has 54% for $54 per share in cash. All the catalysts are potential upside, and I wouldn't be surprised if the stock doubles in value in a few months for some reason, but I don't know when. It can be in 6 months, in 1 year, it can be in 1 day. If there is an announcement that Gravity is doing a dividend policy, a buyback program, the stock will shoot to the stars. But this is not in the philosophy of management, right? I mean, even in 2014, when the company was trading below cash, they didn't do anything. They didn't do a dividend buyback program, nothing at all. Now we have a potential activist, like a second order effect of an activist. So maybe it will be the case, but I wouldn't bet on this one. Just wait and see for Gravity. It can take a while, but as you see with this blue chart, if the stock goes up, it goes up by a lot. And people who bought Gravity in 2017 are now very happy. You can multiply your wealth without much risk because of this huge cash balance that acts as a psychological resistance. So it was just a quick update, guys. If in case it drops more, I think I will buy more Gravity. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio. Additionally, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you are blocked, if you have any questions, I'm here to help. Click the first link in the description to get more information. You will get a video that explains how everything works completely for free. No need to sign up, no need for your email address. Just click the first link in the description and I'll see you on the other side.